How many HMOs does it really take to match or replace your existing salary? In this video, I'm going to break it all down step by step so you know exactly what it takes. Hi, I'm Adam. I trained as a surgeon in the NHS, but these days I'm investing in HMOs with precision. A question I often get is how many HMOs will it take me to replace my existing salary? In this video, I'll break it down step by step. How much a HMO might earn per year, how many HMOs you'll need to meet various salary levels, and finally, how this is influenced by joint ventures. Make sure you stick around to the end because at the end you'll have a clear, actionable blueprint for how to grow serious wealth through HMOs whilst working 9 to 5. Okay, so let's look at some numbers and use my first HMO as an example. So my first HMO's net income per month was £1,777. Now, being conservative and applying a 95% occupancy rate and 5% for ongoing maintenance costs, let's call that £1,500 every month net profit. This equates to £18,000 income per year, and we'll be using this amount when modelling how many HMOs you need to match a salary. As you can see on the screen now, using this approach, you can see how many HMOs are required to match a target salary. You can see that 3 HMOs, presuming 100% occupancy, would give you an income of £40,000, 4 would do £60,000, 5 would do £80,000, and 6 HMOs, 100% occupancy, would give you a 6-figure salary. And this already shows something quite significant. A relatively small number of HMOs can replace a significant proportion of typical salaries. Now let's consider how doing a 50-50% joint venture would affect these calculations. I personally invest in HMOs using the joint venture approach, so I'm very interested to see the answers here. In a typical joint venture, each partner would take home 50% of the profits. So using the numbers above, this would equate to an income per joint venture partner of £9,000 per year per HMO. So let's look again now at how many HMOs, this time using a joint venture approach, are needed to match various salary income levels. As you can see, a salary of £40,000 would require 6 HMOs in a 50-50 joint venture. £60,000 would take 8 HMOs, £80,000 would be 10 HMOs in a joint venture, and those wanting 6 figures, £100,000, would require 12 HMOs in a joint venture 50-50 setup. Next, let's consider different rental income levels per HMO, because not every HMO is built the same. Let's look at a range of salary scenarios, this time presuming 100% ownership, not a JV, and see how many HMOs are required to replace certain salary levels. So the various scenarios are shown on the screen. I guess the takeaway message here is that higher net rent means fewer HMOs are needed to replace the same salary. That's why choosing and executing HMOs with strong cash flow is critical. So let's look at a specific scenario and use £100,000 as the example. So only 5 HMOs would be required to match this income if the take home per HMO was £1,750 per month. However, you can see that if the take home for the HMO was £1,000 a month, then 9 HMOs would be required. So the amount of HMOs required depends on the income per HMO, but you can see that presuming 100% ownership, you'll need between 5 and 9 HMOs to match this salary level. By the way, if you're liking this video or finding it useful, please help the channel grow. If you could do something to that like button, do something to that subscribe button if you haven't already, I would really appreciate it. Thank you. Let's get back to the video. Now I want to make a key assumption, and that is that these HMOs are being run through a limited company. I'll explain why now. Before I do, I need to emphasize this is not tax advice. When taking decisions regarding your tax, make sure you speak with your accountant or your tax advisor. In general, if you're a relatively high earner, owning your HMOs in a limited company might be the best option for you. A major reason for this is that in limited companies, you can deduct the mortgage costs as a business expense. That means you pay tax only on your net profit and not your gross rental income. This truly can make a tremendous difference when scaling your portfolio. There's many videos out there on this already, but if you want me to cover a video comparing limited company ownership and personal ownership, please let me know in the comments below. Next, I want to discuss the real world scenarios. Okay, so this video is asked how many HMOs does it take to replace your existing salary. However, I want to call out the elephant in the room. Not all investors actually want to take all the profits they have out from their company. There's many reasons for this. One would be for tax reasons. Another is because they want to aggressively scale their property portfolio quickly. And this is best done by reinvesting their profit. So in this scenario, investors would take out only what they need to live off rather than all of their profits. Once again, this is one for your accountant, but if you're using a company structure, if you put money into your company as a director's loan, then money can be taken out of a company using your profits up to that level tax-free. My personal take on things, I enjoy my medical career tremendously and I find it rewarding. For me, HMOs are not a way to sack the boss or escape the rat race. For me, HMOs represent technique, a strategy to build high cash flow from an additional income stream alongside my day job. Taking a salary from my limited company using my HMO profits right now would be disadvantageous for me. It would push me into unfavorable tax brackets, and to be honest, my top priority right now is growing the portfolio and accelerating the additional income streams I have alongside my day job. My plan for the next few years is to reinvest all my profits from my HMO portfolio. This will then give me options and decisions to make in the future. So my personal situation is right now I'm onto my 4th HMO, and to match my existing salary, doing it through joint ventures, I would actually need an additional 10 HMOs. At my current rate, I could be there in about 5 years' time. So my plan's quite simple. For the next 5 years, I'm going to get my head down and really apply myself, of course, to my day job, but also building my HMO portfolio alongside, and see where this takes me. By this time, I'll have plenty of options. By the way, if you want me to do a specific video talking about how to invest in HMOs alongside a busy, demanding professional career, let me know in the comments and I will do that. Okay, so let's do a recap. HMOs are high cash flowing assets and they can make a significant contribution towards matching your existing salary. If you wanted to match a 6-figure £100,000 salary, you would need 6 HMOs. Approximately. The exact number required would depend on the net rent for your HMOs and also what structure you have your HMOs in. Are they 100% ownership or are they 50-50 joint ventures? With the right educated approach, building a HMO portfolio can certainly generate a significant additional income stream alongside your day job. Ultimately, you could reach time, location, and financial freedom, and this could give you some very nice options in the future. You could work on your own terms. If you've liked this video, you're going to like my next one. In my next video, I'll be asking the question, how can AI help you choose the best location to invest in HMOs whilst working full time? Make sure you like, subscribe, and I'll see you on the next one.